Global currency shift. Confirmed IQD and VND test rates. Signal imminent revaluation. For years, whispers have circulated among seasoned investors, financial insiders, and private banking networks about a major transformation in the global currency system. Often dismissed as rumor or speculation, this narrative is now gaining credibility, backed by verifiable evidence from internal banking sources. What was once speculation is quickly becoming a developing reality, and the implications could be historic. We are now seeing tangible proof that two major currencies, the Iraqi Dinar, IQD, and the Vietnamese Dong, VND, are undergoing back-end rate simulations within the internal systems of several major financial institutions. These developments suggest a significant shift in their valuation is near, and for those who have been patiently holding these currencies, the wait may finally be over. Welcome to Dinar and Dong Updates, your reliable source for cutting-edge updates, inside intelligence, and credible developments in the rapidly evolving space of foreign currency revaluation. Today's feature brings some of the most explosive revelations to date, shedding light on recent leaks from Tier 1 banks and secure platforms used only by elite foreign exchange and institutional wealth management teams. Verified test rates spark interest across financial sector. Within the last 72 hours, credible leaks from confidential banking environments have surfaced, revealing test rates for both the Iraqi Dinar and Vietnamese Dong on internal screens. The reported values? An astounding $3.18 per IQD and $0.47 per VND. These figures are not arbitrary placeholders. They are active test values entered into institutional systems, used for simulation and stability analysis before a public rate change is implemented. Insiders confirm that these platforms are typically reserved for operational testing prior to activation events. The presence of such rates suggests that financial institutions are preparing their infrastructure for live, real-time currency conversions, an essential step in ensuring smooth transitions when currencies revalue. These systems are inaccessible to the public and operate within secure layers of banking technology used by FX desks, liquidity risk analysts, and high-net-worth advisory teams. When these systems are updated with new test rates, it usually indicates that a real-world event is being prepped behind the scenes. Why these rates? Understanding the numbers. Let's begin with the Iraqi dinar. The test rate of $3.18 per dinar reflects a return to Iraq's pre-2003 valuation, before the nation's economy and currency collapsed due to war, sanctions, and systemic corruption. Since then, Iraq has made significant strides in rebuilding its financial sector. Over the past 2 years, it has increased foreign currency reserves by more than 60%, launched a sovereign digital currency pilot linked to physical gold, fully integrated with ISO 20022 compliant international payment systems, signed strategic oil-for-currency agreements with major economies including China, India, and EU nations, reinforced its banking infrastructure with IMF support and regulatory oversight. When you factor in these fundamental economic improvements, a 3.18 valuation is not only reasonable, it might even be conservative. It aligns with historical values and reflects Iraq's evolving role in the global energy and trade landscape. Now let's turn to the Vietnamese Dong. A test rate of $0.47 per VND may seem improbable on the surface, but a closer look at Vietnam's recent economic trajectory tells a different story. Over the past decade, Vietnam has strengthened its position as a global manufacturing hub, attracting multinationals relocating supply chains from China, modernized its central banking systems and reduced state-owned enterprise liabilities, substantially increased gold holdings and foreign investment reserves, joined regional trade agreements designed to reduce dependency on the US dollar, fostered strategic ties with international monetary organizations, including the IMF and World Bank. This economic growth, combined with monetary discipline, makes a case for a higher currency valuation. A revaluation to $0.47 per dong would elevate Vietnam from an emerging economy to a more dominant player in Southeast Asia, while drastically improving the wealth of its citizens and foreign currency holders. Why simultaneous revaluations? The fact that both IQD and VND are appearing together in back-end rate testing is significant. According to currency experts and institutional insiders, a synchronized revaluation makes strategic sense. It allows for a more controlled liquidity flow and balances forex market volatility across multiple regions. From a macroeconomic standpoint, this could also be a signal of a broader, coordinated realignment of global currencies. Many speculate this may be linked to global de-dollarization efforts, where countries move away from USD dominance in favor of asset-backed systems or digital currencies, underpinned by gold and commodities. Synchronizing two significant currency revaluations can distribute liquidity impact more evenly across global financial corridors, reduce the risk of market manipulation or speculative runs on single currencies, align monetary policy shifts among IMF-partnered nations, create balance in regional and global forex transaction volumes. In short, what we're witnessing may be part of a much larger, orchestrated shift toward a restructured global financial system, one that rewards asset-backed currencies and penalizes unsustainable debt models. Inside the banking systems, test environments. Go live. According to internal sources, the test rates have been observed on back-end trading screens at 3 Tier 1 banks, 2 located in the United States and 1 in Singapore. These banks are not named due to non-disclosure agreements, but they represent the highest level of institutional access in the financial world. The test environment where these rates were seen is not meant for public consumption. It exists behind firewalls and encryption layers to allow analysts and software engineers to run transaction simulations without triggering real trades. These simulations help banks test system stability, verify conversion logic, ensure compliance with AML and KYC laws, confirm interoperability with global SWIFT systems and payment rails. Screenshots viewed by insider sources and cross-referenced via secure messaging platforms have confirmed that IQD and VND rates are in motion. This strongly suggests that banking systems are in final stage preparation for potential live trading. Are redemption centers preparing? All signs point to yes. According to multiple sources within the private wealth and asset redemption ecosystem, banks are moving into high alert mode. Redemption centers, the secure, appointment-only facilities designed for high-value foreign currency exchanges, are reportedly beginning final rehearsals. Key preparations include printing and reviewing updated rate sheets, preparing legal contracts for structured payout offers, running simulations with internal wealth advisors, alerting Tier 3 clients, private high-volume holders, for conversion consultations, reviewing NDAs and confidentiality protocols. Insiders also report that some high-net-worth individuals have already been contacted for early exchange planning. These individuals are typically clients who previously declared exotic currency holdings in portfolio audits or private wealth reviews. What should currency holders do now? If you are holding Iraqi dinars or Vietnamese Dong, now is the time to prepare. While exact dates remain undisclosed, the movement within institutional systems suggests activation could occur with little public notice. Consider this your final checklist. 1. Verify your holdings. Make sure your notes are clean, undamaged, and authentic. 2. Organize documentation. Have receipts, wire confirmations, or notarized purchase affidavits ready. 3. Secure identification. Gather your government-issued ID and backup identification. Plan your redemption strategy. Will you accept a public screen rate, or are you open to NDAs and structured payouts for higher rates? 5. Engage professional support. Line up tax attorneys, wealth managers, and trust specialists now, not later. 6. Stay silent. Do not discuss your plans on social media or public forums. Breaching confidentiality may disqualify you from structured offers. What to expect at your appointment. Once Tier 4B General Public with pre-held currencies is activated, you'll be scheduled for an appointment. Here's how that process typically unfolds. You will receive a secure location and check-in time. Upon arrival, your currency will be verified under UV light and digital serial tracking systems. You will be escorted to a private exchange room. A base rate will be offered, along with potential structured payout options if applicable. Advisors will answer questions, and you'll have limited time to make decisions. Upon acceptance, funds will be allocated to new accounts, business entities, or trusts as instructed. The entire process may take anywhere from 45 minutes to several hours, depending on the complexity of your portfolio and exchange route. Responsibility comes with wealth. While the possibility of significant returns is real, so is the responsibility that comes with it. Wealth, especially when acquired quickly, requires disciplined stewardship. Having proper financial, legal, and philanthropic frameworks in place will help protect your assets and create long-term stability. Ask yourself, will I use this opportunity to create generational wealth? Am I prepared to contribute to charitable causes or community investment? Do I have trusted professionals guiding in need